video. Sorry, I always do that at the intros of my videos, but it's a force of habit. Thanks for having me back, Nick. I'm gonna go through some trades that I'm looking at right now. So actually, I'll go through the first trade I want to go through is a trade that I'm actually in right now, and which is a long on gold. Now, I love to take the praise for this one, but I actually got this from one other trader that I'm following called it's TJFX. He's a pretty good trader. He just sticks to gold. And I use a combination of his strategy and my strategy to get a really good sniper entry on gold. So what I did here was that there's a lot to look at right now. My charts are really technical, but I use smart money concepts. So what we see is that obviously on a weekly chart, gold is bullish. It's very easy to see that gold is bullish. It's been bullish for quite some time since it was about 1674, which was early April. So we know that the uptrend is bullish on the weekly, and on the daily, it's bullish as well. Now, what I found was that there was this order block here that was really important. Once it broke through it, I doubt it was going to break below it, because for it to break below it would mean that it would probably become bearish again. So I knew that this area here was going to be really hard to break through, just because of this kind of daily order block that had been broken through and now was acting as a support. So then I went down to the 4-hour chart, and on the 4-hour chart, what I saw here was that there was also another order block. So historical order blocks are always still important to mark up. So this is a very important order block here, because if you look at this order block here, all the way back in January, once it was created, it made the impulsive move down, which shows how important this order block is. So once I marked that up, I found that this order block was acting as a resistance. So when price started climbing up, it was making a little bit of like a trend line, so a support line here. And as we know, retail trend lines are meant to be broken because there's liquidity sitting underneath it. So once it hit it a couple of times, it sold off. And what it sold off to was this order block here. Now, even though this is just a wick, you have to look at this wick with some sort of importance, because this wick was the first. Was basically if you refine it here, you'll find that there was like there was probably a bearish candlestick before the impulsive move up. So this was an order block. I actually had something marked up, like an alert marked up here, so I could take a long, but it just wicked in and wicked out without me. I didn't set a limit order, so I wasn't in a position to take a long, which I was kind of annoyed about, because I got this correct, but I just didn't have the time, or I didn't get the entry that I wanted to take a long, and I didn't take a limit order. So now price broke up to the upside emphatically, and this was all NFP. So this sell-off was just a liquidity grab of all of the stop losses and that was set underneath this equal low, and then it sold off. Now I thought it was going to sell off to here, but it sold off all the way down to this order block, and then it recovered again the next day. Obviously, there's a lot of inefficiency in this little area here, because the price just sold off quickly, and then it came back up during NFP. Now, if you go down to the 1-hour chart, you can see here that there was like an order block here, or 1-hour order block here. Now, price could have done one or two things. Now, there was two theories. There was two theories as to what was going to happen next. One was either price was going to come back here and retest this bit and then come up, because price is still bullish at the end of the day. I don't think it's going to break below. Once again, I said I don't think it's going to break below this area, and if it does, then we're in big trouble. I don't think it's coming any lower than this. So it's going to either come back down, retest this order block, and then climb, or it was going to come down to here, retest this order block, and climb. Because even though price broke through and mitigated this order block, there's still an order block here, and it can still be respected. And if you look at this line here that was drawn where this long wick is, you can see that that's exactly where it respected. Now this is where you get really granular. I took 2 entries. No, I took 3 entries. Sorry, I took 3 entries on this long. So then you go down into like the 3-minute chart or the 5-minute chart. I went down to the 5-minute. Now this just looks like nonsense to a lot of people, but after quite a lot of practice refining entries on lower time frames, what I did was that I went down to the 5-minute chart, and what I saw was like high highs being produced. So it's like break a structure, break a structure, and then retrace back down to the order block. Break structure, retrace back down to the order block. Break structure, retrace. So it was laddering up, which gave me more confidence that price was going to be bullish. So once it laddered up twice, on the second one, I took a long, and I set my stop loss just below here, because if price breaks below any of these lower highs, then the pattern's broken. So I could set a pretty tight stop loss. This stop loss was, yeah, tell me how big was the stop loss? 18 pips or something like that. Well, I can't remember. But anyway, really tight stop losses. And then break a structure, and I entered again, second one. So and the minute, once I entered the first one, once I entered the second one, the first one, I moved my stop loss to break even. So now risk-free trade. Second one again, broke. And what annoyed me is that I could have entered the third one, because if you go down into even lower time frame, there was an impulsive move here. Can you see this impulsive move here? Broke structure. And then lo and behold, what time? Guess what time this is? Guess what time this retracement was? 2:30, well, 2:30 UK time, which is 9:30 US time. And obviously that's where it mitigated. It went back down and retested this order block. So I could have taken a third entry, but I thought, so I took 3 entries, but I took 2 in one and then 1 in the other. And I could have taken another one. Now all of these entries are at break even. So now I'm just going to let it run. But then you ask, where is the, where am I going to set my take profits? Well, that's a good question. Well, my take profits are going to be here. So it's going to be at 1906. The reason why it's going to be at 1906 is two reasons. Because even though I'm using smart money concept and the order blocks, this is still following kind of like a retail pattern. It broke the horizontal, it broke the support line, and then it's going to retrace back to the support line. And lo and behold, there's lots of confidence here, because this area is not only where the support line intersects, but it's also where another order block intersects. So there's a lot of confidence here. So I expect price to go all the way up to, what am I doing? Price to go all the way up to here, minimum, because this is an order block that has not been mitigated. This 4-hour order block caused this big impulsive move down, and price needs to come back and grab the liquidity at this order block, which is also the same place that intersects with the equal low line. So even if you didn't know nothing about smart money concept, you still recognize a break and a retest. And that's exactly what it is. So that's a combination of SMC and retail strategies. I like to call it smart money retail, which is where you use a combination of the retail trendline strategies in confluence with smart money concept to get your sniper entries, and then to also know where to set your take profits. So my take profit is going to be about 1906, so around there. And I'm pretty confident it's going to hit that, just because of, as I said, confluence of both 2 different strategies together. So then I'm looking also at, I was also looking at US 500. Now this one was really annoying, because I once again, I wasn't fast enough to get my entry in, because I've noticed that price respects the 4-hour and the 1-hour order block pretty well on S&P 500. So what I saw here was that, this was last week, what I saw here was that there was, once again, there was this order block. Well, let's go to high time frame first before I get too ahead of myself. Bullish, and there's this trend line here. Once again, we know trend lines are meant to be broken, so at some point I'd expect price to break this trend line at some point, but it might not be today, tomorrow, or even next week, but I expect this to get broken at some point. Now, if you go down to the 4-hour chart, price is still bullish. It's making higher highs, kind of going up and down. But what I saw here was this was something of interest to me. This was a impulsive move on the 4-hour chart with an order block here that had been unmitigated. So I thought this is a great place to take a long. And what made it even more juicy for me is that an order block has been created, and then also like a equal lows has been created. So this is just where obviously liquidity is sitting underneath here. So what I wanted price to do was break underneath it, tap it, and then come up and then retest this order block here. So that's how I like to trade, order block to order block. And lo and behold, what did it do? It exactly tapped in, and then it retested that order block. Now I missed this one mainly because when did it do it? Yeah, okay, tapped in at 2 o'clock. It was again one of those situations where it tapped in pretty fast, then it just shot up, and then when I was trying to look for another entry, it wasn't there. Now where I could have entered would be probably here, because this created another order block on the 10-minute chart. If you get what I mean. So if you go down to the 10-minute chart, another breaker structure, impulsive move, retrace back down, and take a long. Now I could have taken a long here, but it was 1 a.m. so I missed it. Kind of annoying, really, but I'm still happy that I kind of had the right idea. And once again, FOMC was what caused this push up back to this order block here. What else am I looking at? So I'm also looking at USD JPY. Now, I find quite interesting is that Euro USD, I was looking at this before, and what I saw was that I've got some friends that do Elliott Wave, so I like to mark up some of the lines as well just to see what was going on. And I saw that there was like an ascending wedge here, and this is what I'm talking about when I talk about smart money retail, because smart money concepts and retail concepts can work in confluence. It's not an either or thing. So I've got a lot of lines drawn up here, so I don't want to confuse you guys. But straight up, this is okay. Forget about smart money concept. This is an ascending wedge, and we all know ascending wedges are meant to sell off afterwards. You can break out, retest, and then sell off, and that's exactly what it did. If you just forget about smart money concept. Now, if you use confluence to find out, okay, if you saw this break and then you expect a retest, where would it retest? Now, straight away, my eyes would be drawn to this area here, because once again, see, it's just all about a matter of just seeing the same patterns play out. This is a 4-hour order block, impulsive move. Price is it's like a magnet. It wants to find its way back to that to grab the liquidity within that. So then you go down to the 1 hour again, and then you refine. And then there's another 1 hour order block. Can you see here? This 1 hour bit is an order block. So price would come back down. It didn't actually really reach the 1 hour, but it's close enough anyway. And then it sold off, and it sold off emphatically. And here, and then once it got, and it started making equal highs. Once again, equal highs are meant to, what are they meant to be? Meant to be broken. Wherever there's equal highs or equal lows, there's often liquidity, which is why I drew this equal lows here as well, because this equal lows will be broken at some point because there's an order block sitting underneath it. So I didn't take this long on EU, but it doesn't really matter too much because I took the long on gold. And as you know, EU and gold are kind of correlated. So I didn't want to double down on the trade that was too similar. Yeah, so they're kind of correlated. As you can see here, the gold position I took was a long here, and EU broke out in the same way. So it didn't make sense for me to take a long on both when they're pretty highly correlated. I tried to mitigate, like, take different trades in different pairs so that I'm not overexposed to one currency. So then I'm also looking at, once again, I'm also looking at AUUSD. Now this is a trade that I was gonna take pretty much now, and I'm still deliberating whether to take it, but this is my thought process. Okay, on the daily chart, it's a lot of noise, a lot of craziness. But as you can see here, if you look at the most recent, there was a breaker structure on the daily, and then it impulsive moved back up. On the 4-hour chart, you can see that this breaker structure here, and then it moved back up. That you can find that there's probably an order block sitting within this wick somewhere. But there's also an order block up here, because as you can see here, this is a breaker structure. So there's 2 order blocks that you could work from. Where am I? It's 2 order blocks where you can work from. And you can basically, what I saw was that I wanted to see this kind of make a sell off here. So I was gonna take a short from here, and this is still an area where I'd get to take a short from. Then I decided against it. The reason why I decided against it, because if you guys know about the confluence between different currency pairs, gold and AUD/USD are quite positively correlated as well. So it would not make sense for me to take a short in AUD/USD, Aussie dollar, and take a long in gold, because I'm basically I'm hedging my own trade. If I'm really sure about the long on gold, I shouldn't really take a short on AUD/USD. Now this may even play out, but I just didn't feel that comfortable taking a short and a long on 2 pairs that are correlated. Once again, as you can see here, you can see that the correlation. You can see that they kind of follow similar patterns in a sense. So maybe this will sell off, but I want to wait for gold to lose momentum and to kind of lag before if I want to take a short on AUD/USD. No. So another trade I took today. So I took 3 trades today. I took gold, I took New Zealand JPY, and I took Euro GBP. Euro GBP did not work in my favor. Stopped me out. Kind of annoyed. What I saw was that on the daily time frame, there's a big order block here that price needs to basically make its way to. Now, I made a big impulsive move, and then it's just been kind of laddering down ever since. And as it's laddering down, Every time it makes an impulsive move, it'll retrace back down to the order block and then sell off. So that's what it's done here. Impulsive move and make its way back down to the order block. And what I was hoping for was that this order block had been mitigated. So when you go down to the 1 hour chart, or you go down to the 5-minute chart, you can see that this was a breaker structure, and then a retracement. So I was expecting price to come into here and then sell off, but it broke my 5-minute entry. So that was a loss, 1 hour loss. But I'm in NZ, New Zealand JPY, and this one's done pretty well. I was kind of annoyed on Friday because I thought I missed this entry, but I think but I caught it pretty well today. So basically what I've seen was that on the daily, on the weekly chart, this is one of the best setups you want to see. On the weekly chart, bullish. On the daily chart, bullish. Once again, equal high, equal lows, mitigated, then pushed up. On the 4-hour chart, bullish. So all the different time frames telling me bullish. Now on this one, there's an impulsive move. Once again, impulsive move, breaker structure, retrace back down. And if you really refine that order block, this is the power of that order blocks. If you refine that order block down to the 5-minute, this is what I found. So this is the order block that I found when you refine down to 5-minute. And I put a blue line above it and a blue line below it. And lo and behold, that's exactly where it tapped into. So I could have sent a risk entry here and I would have been fine. So now I was looking for another entry because I'd missed that entry here. Price had gone making high highs, climbed, and then this is another unmitigated order block on the 5-minute. And this would have been a great entry, but this one wicked in and then wicked out. And this was because of NFP. So what I saw here was that, okay, there was equal lows forming, and then obviously it broke that, mitigated that, came to this order block and then shot up. And I was like, okay, cool, I've missed that entry now. Too bad. Let me find another one. So then I went to the 15-minute chart. And on the 15-minute chart, let me put the replay tool on. On the 15-minute chart, okay, I saw, okay, this is a breaker structure on the 15-minute chart. And I thought, okay, price is going to come back down to this area here because this is like an unmitigated order block. I thought that would be a great place to enter. And then what happened? Sunday night, when markets opened, it just wicked into it. And if you know about Sunday evening Forex spread, was too big. It was, especially on something like New Zealand JPY, it was too big for me to enter. If I'd entered here, my entry would have been about here because of the spread. So I thought, I'm just going to have to leave it. So then overnight, made another breaker structure. But then I thought, okay, even though it wicked in here, there's a chance that it might come back again because that was during spread hours. It probably needs to mitigate again. So I set an entry at this point here. And I just set a limit order. And then lo and behold, once again around like 9 o'clock, it wasn't around 9 o'clock, around 7:30 entered. And exactly what I wanted to happen happened. It tapped into my area, and then now it's just climbing. And what I see, what I expect for this one to do is that I expect for it to go all the way up to the daily high. Sorry. So I'm holding this all the way to 80.175, and hopefully should get there within maybe a week or two. I don't know. We'll find out. So yeah, I've been talking for a while. So if there's any questions or anyone that wants to say anything, or I could continue because I can talk for hours, mate. All right, I'm going to continue a little bit. So now we've also got those are the two trades I'm in, New Zealand JPY and gold, and they're both longs. So I'm just holding those ones. And what I was looking at before, I was actually in a position with Ethereum last week, but then it stopped me out at break even. So what happened with Ethereum was, this is where sometimes when you see chart patterns that everyone's looking at, sometimes that's not a good thing because everyone can see the same thing. And that's when whether you want to call it institutions or people just trying to run out your stop losses. So I saw, obviously, everyone is looking at this wedge formation that's been forming on both Bitcoin and Ethereum. So I took a long on the retest, and I was expecting it to just kind of climb all the way up because obviously with Ethereum and with Bitcoin, they're kind of in limbo right now. It's creating a converging wedge, and obviously retail strategy will tell you breakout, retest, climb. So when it broke out, it retested, And then I went down to the 1 hour order block and then to find the entry. And then I found the entry, I think around here, because once again, let me delete that. Once again, same thing I do all the time. Order block, impulsive move, break a structure, wait for it to come back down. When it comes back down, you take your entry. So I took an entry, I think here or something like that. And then once it started climbing, I moved my stop loss to break even. So it was, where was it? So I took an entry kind of like, where was it? Like here. And then I moved my stop loss to break even, and my take profit, I wanted it to go all the way up to, my plan was to hold it all the way up to like 3360 or something like that. Now, obviously, kept climbing. I thought, okay, I'm good to move my stop loss to break even. And then, as we know, on the weekend, it just kind of ran all of like, it just broke this pattern completely. This wedge pattern just was broken, and it just kind of was just basically ranging sideways. And it took me out because my stop loss was about here, but it's just one of those things. I still think Ethereum and Bitcoin is bullish, but now if I want to take an entry, I still want an entry that will give me high value, like a really good entry that I can move my stop loss early, because that could have been like an 11R trade, but I'd rather take break even than a loss. So if I can find another entry, I'll find it. But right now, it's just looking a bit funny. It's just moving sideways. So I don't really know what to do with Bitcoin and Ethereum. I might just sit on the sidelines for now until something happens that really tells me which direction it's going. And I'd still believe it's going to go up, but this price action tells me nothing really, and doesn't really look good to me. It's not sexy enough for me. And finally, we got USD JPY. Now, this is what I'm talking about. When you spend time on the charts, you start seeing things over and over again. This looks exactly like similar to the Euro USD chart pattern. You see that, like ascending wedge, or you can call it a 1, 2, 3, 4, 5 if you're the Elliott waver, and it breaks down, and that could be like an A, B, C. So and USD JPY is doing the exact same thing. It's making a wedge formation. So I believe that this is going to retrace back up to this area and then sell off. Now, if you look at the high time frame, you can see that what's going on? This auto thing on TradingView is so annoying. You can see that on the daily, there's an order block here, and price has been, and it's been mitigated by these two candlesticks, even though it might want to do a deeper retracement into the 4 hour order block. You never know. So now that it's made a breaker structure on the 4 hour, I think there's a chance that it's going to come back up, either retest this line or this line, depends. Because if I go deeper down, if I zoom in a little bit more, you'll see that this could be the order block, or this could be. The reason I say that is this could be the refined one, is because this is the last candlestick before a sell-off, and this has not been mitigated, and then this has not been mitigated. So it could be one of either of two. So I'm just going to wait for price to come to either of them, and then I'll see. I might take a short there, I'll take a short there, and I'll take a short all the way back down to like equal lows. So wherever the most recent low is, I'll take my stop. I'll take my price to there, my trade to there, and that could be like either 10R or 14R or something like that. But yeah, that's what I'm waiting. I'm waiting for this one right now. This may take a couple of days as well. So yeah, these are quite a few trades that I'm looking at. Well, not a few trades. I'm in 2 trades right now. I'm in NZD JPY. I'm in gold. Gold's gonna go all the way up to, I reckon this could happen within the next couple of hours, to be honest. That'll be a good TP. That'll be 10R secured Monday. Awesome. Just don't lose it all the rest of the week. Yeah, so that's it really. Those are what I'm looking at right now. Also, actually, one last thing. I'm looking at, this is real speculative. I don't know if this is, but I was looking at Tesla. I was looking at Tesla, and it looked like it's making a bear flag. And then what I did was that with Tesla, when I saw the bear flag, I took the point from the entry, the lowest point of the entry of the channel pattern, to the top here, and then I moved it here, and lo and behold, it took us exactly into this order block here, which is like the daily order block. So I think Tesla could be making its way down to about 14, 15, but this is going to take, as I said, this is a swing trade if you want to take that potentially. This is just, I said, chart pattern analysis. I don't know what's going on in Tesla's books or anything like that. I don't really look at fundamentals but this looks like a textbook channel pattern and then a bear flag. And with the bear flag, whatever this distance is the same for this distance. And there's strong confidence if this here to this here takes you to an order block, because order blocks are always places where price is trying to gravitate towards. So yeah, my prediction is Tesla 415. When, I do not know, but yeah, I'm not taking this trade though. But that's just something I was looking at. So yeah, that's me. I think I've kind of gone through everything I'm looking at right now, all the trades I'm looking at and what's going forward and all the trades I'm in right now. So yeah, guys, it's Any, aka the NocTrader, signing out.